One day, you decide to go shopping and end up liking a pair of shoes. What is the first thing you do when you like something? Check its price, of course. So you see a price tag of 500 rupees. This is called the marked price. But you think 500 rupees is way too expensive and you decide against buying it. But when you turn around, you see this board which says 40% off on all products. This, as we all know, is the discount percentage. We need to find out the price at which we will be able to buy these shoes after factoring in the discount. The first thing you need to know is that the discount is always a percentage of the marked price. What do you think will be the discount in this case? Yes, it will be 40% of the marked price. Remember, discount always a percentage of the marked price. The marked price is 500 rupees. So the discount is 40% of 500 rupees. We know how a percentage of a given quantity is calculated. We write percentage with denominator 100 and of as multiplied by. Hence, this will equal 40 by 100 multiplied by 500. 100 times 5 is 500 and 40 times 5 is 200. That will give us a discount as 200 rupees. This is the discount in rupee terms. Earlier, we had the discount in percentage terms. The price at which you will buy the shoes will be called the selling price. What will be the selling price? Yes, it's intuitive. You will reduce the discount from the marked price. The marked price is 500 rupees and the discount is 200 rupees. So the selling price for the shoes will be 500 rupees minus 200 rupees, that is 300 rupees. This tells us that because of the discount, you end up buying the shoes at 300 rupees. Remember, the marked price will be the price on the price tag and the selling price will be the final price at which you will buy that product after factoring in the discount. And if the discount is given to you in percentage terms, it means that it is a percentage of the marked price. This lady you see here wants to buy a pair of slippers. She sees that the slippers are priced at 100 rupees. And at the moment, there is no discount. Can she pay 100 rupees to the shopkeeper and buy the slippers? Is that the only amount she will have to pay? No. Apart from this 100, she also has to pay something called tax, which goes to the government. So apart from the 100 rupees, this lady also has to pay an additional amount to the shopkeeper and the shopkeeper pays that amount to the government. This kind of tax is called sales tax. Basically, it is the tax that is paid by the shopkeeper to the government for selling the goods. And the shopkeeper collects that tax from you. Assume the sales tax rate is 10%. Now let's calculate the tax that this lady will have to pay. The sales tax will be 10% of 100 rupees. We consider 10% of the marked price. That will be 10 by 100 multiplied by 100, which equals 10 rupees. This is the additional amount the lady will have to pay over and above the marked price in order to buy the slippers. So the total price of the slippers will be 100 rupees plus 10 rupees of tax, and that amounts to 110 rupees. Let me give you another interesting scenario. The lady goes to the shop after a month to buy the same pair of slippers for her sister. But this time the shopkeeper is offering a 40% discount on the slippers. Now it gets really interesting. First, let's calculate the selling price after the discount. Remember, the discount is always a percentage of the marked price. So the discount in rupees terms will be 40% of 100. 40% of the marked price. It equals 40 by 100 multiplied by 100. 100 cancels out and it will equal 40 rupees. This will be the discount on these slippers. The selling price will be equal to the marked price minus the discount. Marked price is 100 and the discount is 40. Hence, the selling price would be 100 minus 40, which equals 60 rupees. Now, here's the tricky part. This lady will have to pay sales tax here too. But the important question is, does she pay tax on the marked price or on the discounted selling price? Well, the sales tax is always paid on the selling price and not the marked price. Let's zoom out a bit. In this case, the sales tax will be 10% of 60. Remember, 60 is the selling price. It will equal 10 by 100 multiplied by 60. 10 times 10 is 100 and 10 times 6 is 60. Hence, the sales tax equals 6 rupees. Compare the sales tax in each case. Here, it's lesser since the percentage was calculated over the selling price, which is lesser than the marked price. So the total price you will pay this time is 60 rupees plus 6 rupees, that is 66 rupees in all. Zen wants to buy a Don't Memorize study book which costs $100. But he's wondering if he should buy from state A or state B. They are neighboring states with different sales tax rates. State A has a sales tax rate of 10%, while state B has no sales tax. Now Zen obviously wants to buy the book at the cheapest possible price. If he buys the book in state A, then along with the marked price of $100, he will have to pay a sales tax of 10% on $100, which is $10. $110 in all. But as state B has no sales tax, Zen can buy the same book for just $100. It was a pretty simple decision. As there was no sales tax in state B, Zen decides to buy the book from that state. Because he's short of cash, Zen decides to buy the book a week later. So a week later, Zen was about to buy the book from state B when he realizes that the same book now has a discounted price of 10% in state A. Now he is puzzled. He's not sure where he should buy the book from. What do you think? Should he buy from state A or state B? Or does it not matter because they will be the same? Zen asks his friend Zara for help. Instead of telling him the answer, Zara decides to give a detailed explanation. She says that the price of the book will remain $100 in state B as it does not levy sales tax. What we need to find is if the cost of the book is any different in state A. If it costs lesser in state A, Zen will buy it from there. Else, state B it is. Zara then tells Zen a very important point. The sales tax is always calculated on the discounted selling price. As the discount is 10%, the discount in dollar terms will be $10. The discounted selling price will be 100 minus 10, which is $90. 100 is the marked price and 10 is the discount. The sales tax of 10% will be levied on $90. 10% of $90 is $9. Zara tells Zen that the total price of the book in state A will be the discounted selling price plus the sales tax. That will be 90 plus 9, which is $99. And finally, Zen realizes that with the 10% discount, buying the book will be cheaper in State A. But the point to take away in this video is that the sales tax is always calculated on the discounted selling price and not the marked price. And perhaps a bigger takeaway is that we must not jump to a conclusion until you have carefully calculated the different outcomes. At times, the most obvious correct answer could be incorrect. Factories generally produce goods in huge numbers, and they want to sell it to people like us. But as the business cannot have factories everywhere, they find it difficult to reach you directly. And that is why we have shops or outlets that can sell us the goods produced by the factory. So when you buy goods, you pay money to the shop and the shop pays money to the factory. Now, you may want to buy insurance for your family from an insurance company. But you do not go directly to the company to buy insurance. The insurance company too will not have enough manpower to handle so many clients. This is where an agent comes in. The agent will not only give you an insurance product, but will also help you choose the best product. You buy your insurance through the agent. Now assume you're changing your residence for which you would want to sell your previous house to someone. So you become the seller, and what you're looking for is a buyer. But you cannot call or email everyone to know if they're interested in buying your house. That is where an estate agent comes into the picture. The agent finds a buyer for you, and your task becomes easier. You don't have to keep looking out for buyers. Now look at all these people in between: the shops, the insurance agent, and the estate agent. All these people in between take a commission or a margin which is over and above the basic price. Why do they take commission? Because they are providing you with various services which are of help to you. You will understand better with an example which we will see in the next lesson. Dave sold his house through an estate agent. The price of the house was finalized at 1 million rupees. He had to pay the agent a commission of 2%. How much money did he get on selling the house? Understand the question well. Dave had to sell the house and he approached an agent to find him a buyer. Dave has decided the price at which he wants to sell the house. It's 1 million rupees. But for the agent to find him a buyer, he needs to pay the agent some commission. What's that commission? It's 2% of this price. So let us calculate the commission that is given to the agent first. It is 2% of 1 million rupees. So it will be 2% of this. That is 2% of 1 million or 10 lakhs. 2% is 2 over 100. Of is multiplication and it's multiplied by the amount. 100 multiplied by 10,000 is 1 million rupees. And 2 times 10,000 equals 20,000 rupees. This is the commission that the agent will keep for his services. We have been asked the amount of money they will get on selling the house, or the actual price received by Dave. It will be this amount minus the fees given to the agent. It will be 1 million rupees minus 20,000 rupees. This is the price of your house, and these are the agent's fees which are deducted. This will equal 980,000 rupees. In short, you have paid the agent 20,000 rupees for finding you a buyer.